Yeah, no, I think it's an interesting question, Sarah, because, when you think about this, you just mentioned it's a good exit for a private equity firm, right? Well, look what we saw last week. We saw Elliott take this stake in Pinterest. Pinterest was down 80%. It's a profitable company. About a third of their market cap was in cash, nearly 80% gross margins. And Elliott taking a stake, the CEO had just left, so they weren't pushing him out. It probably is to basically maybe push them to sell to private equity or lever the thing up a little bit. So we might see a lot of M&A and some washed out stuff. We might see a lot of M&A strategic, like this deal that you just mentioned. We're not going to be talking about One Medical, $3.5 billion acquisition, probably for a long time again with Amazon until they roll it out with something broader. And it's really some sort of deal that might move the needle here. But I think it is important to understand, especially with a name like Amazon, where, Andy Jassy, the CEO who took over for Bezos a year ago, he's going to put his own imprint on this company. And it might look like a different company than it was under Bezos a few years ago, especially when you consider that he was the one at the helm who built AWS over the last, 10 plus years that really allowed Amazon to go in a lot of these different directions because of the great margin and the great growth in that business. So Andy Jassy's probably got a few more tricks up his sleeve, is my guess.
For better or worse, because the stock has definitely underperformed, partly the environment under his tenure, but also Amazon has been a disappointment for the Bills.
I think for better. I think that, at the lows just a month or two ago, the stock was down 45% from its all-time highs made last summer. This is a company that built a vaccinated supply chain during the pandemic. They obviously overbuilt. They're kind of bringing back some of that spend as it relates to the logistics and the warehouses and the employment. They're going to get their expense ratio back in, I think, in line here. And then there'll probably be some good strategic pushes that take the company in a different direction that make long-term believers in this story. Yeah. And you have to be a long-term believer because of the valuation that this stock has always traded at a premium to the market and its peers. So to me, I think down 33% now from its highs looks kind of interesting. It's up 20% in just the last few weeks alone into that print next week. I don't love that. That's not a great setup. I'd love to see this thing back towards 100 and then start taking a longer term view of how that thing gets back to its highs over the next few years.
Well, it is helping lead the market today, and tech in particular, along with Apple, and Tesla is now the #1 performer on the S&P 500.